All right, today we're going to dive into the absolutely stunning transformation of CGPOWER. As of early February 2026, it's really a masterclass in corporate reinvention. We're going to break down exactly how they pulled it off and, what it all means for the future. So what we're looking at here is a company that has, fundamentally changed its DNA. I mean, just a few short years ago, CGPOWER was this debt-ridden industrial giant. Now, it has totally reinvented itself as a high-growth engineering company, and it's sitting right at the heart of India's big semiconductor ambitions. This whole journey, from old-school power systems to cutting-edge microchips, that's really the core of the story today. And believe me, the market has definitely taken notice. The big catalyst here? Well, it was the recent announcement of Semiconductor Mission 2.0 in the union budget. That single piece of news sent the stock surging nearly 10% in just 48 hours, hitting an intraday high of 669 rupees. This is a massive policy tailwind that's just fueling an already incredible transformation. So the big question is, how did they pull this off? Well, it wasn't just one magic bullet. It was this carefully engineered dual-engine strategy. It was all built on two things: a complete financial reset and a major strategic pivot. Okay, so it all kicked off with what the source material calls the Murugappa reset. Back in 2020, the Murugappa Group came in and acquired the company through Tube Investments. They brought in some serious financial discipline, completely cleaned up the balance sheet, and took the company from being buried in debt to being nearly debt-free today. That was the absolutely critical first step. First up, let's talk about that legacy engine, the power and industrial systems segments. They really form the bedrock of the company. They are a market leader in these critical components, things like extra high voltage transformers, which are absolutely essential for India's ambitious 500 gigawatt renewable energy goal. So this core business provides a really robust and profitable foundation. Now, the second engine, this is the real game changer. It's a strategic pivot right into high-tech manufacturing. The company formed this powerhouse joint venture with global giants Renesas Electronics and Stars Micro, and that marked their full-fledged entry into the semiconductor value chain. They're specifically focusing on what's called OSAT, that's outsourced semiconductor assembly and testing. All right, so how does this whole dual-engine strategy build the bull case? Well, it really comes down to three key pillars. First, just take a look at this order backlog. It has absolutely swelled to a record of nearly 15,000 crore rupees. I mean, that's a massive 66% year-over-year growth, which gives the company incredible revenue visibility for years to come. This isn't just wishful thinking. This is secured business. Second, its financial health is just exceptional. The company's return on capital employed, or ROCE, is clocking in at over 30%. For a capital goods company, that is absolutely top-tier performance. It just shows how incredibly efficient they are with their assets. And third, they have the firepower to actually fund these huge ambitions. The company successfully raised 3,000 crore rupees through what's called a Qualified Institutional Placement, or QIP. This basically created a huge cash war chest to fund all its capital-intensive growth projects without having to take on any new debt. But of course, for a balanced picture, we have to look at the other side of the coin. There are some pretty significant risks and counterarguments that you have to consider. The biggest risk here, really, it all comes down to one word: execution. The plans are incredibly ambitious, sure, but the major milestones for this whole semiconductor venture, they're still way out on the horizon. The first pilot ships aren't even expected until mid-2026, with mass production starting late that year or maybe even into 2027. So a lot of the good news is still in the future. And this brings us to the most crucial point for the bears: valuation. The numbers here are pretty stark. While traditional industrial peers are trading at a price-to-earnings ratio of around 30, CGPOWER is trading at over 90 times earnings. What that means is the market is pricing in flawless execution and success years before it's actually happened. Operationally, there are some headwinds too. The Q3 FY26 results showed that the industrial systems segment is facing margin pressure from high commodity prices, especially copper and steel. Now, the company's pricing power in its legacy business does give it a bit of a cushion, but this volatility is still a key risk to their overall profitability. So to kind of sum up the bear case, that super high valuation leaves absolutely zero room for error in executing the new semiconductor venture. Commodity prices could squeeze their margins, And you've also got a geographical concentration risk with the new flagship facilities being in Gujarat, not to mention potential delays in just getting the right equipment or hiring the right people. So where does all of this leave us? Let's try to synthesize the bull and the bear cases to really get a handle on the final analysis from a source material. The source's verdict is actually pretty clear. It classifies CGPOWER as a long-term compounder. That's a company with strong fundamentals that's capable of sustained growth over time. But, and this is a big but, investors are paying a significant premium for the optionality, which is really just the high growth potential that the semiconductor business might represent. And this brings us right to the central conflict. On one hand, you have fundamentals that are undeniably robust, a clean balance sheet, a powerful order book, and excellent management. But on the other hand, the valuation is incredibly expensive. It demands nothing less than absolute perfection. And that, well, that's the core dilemma facing any investor looking at this company. Ultimately, it all boils down to this one simple question. CGPOWER has transformed itself into a real bellwether for India's manufacturing ambitions. But does a bet on that high-tech future justify paying today's really premium price? That's the question to ponder.